Hey everyone, welcome back to Corporate Decoder, where we try to find the skeletons in the corporate closet. And today we're diving into a new SEC filing that might just let us peek behind the curtain of a financial trust that is looking to finance some big deals. This is Lument Finance Trust Incorporated, an entity that deals with real estate debt, and it looks like they are setting themselves up for some significant financing activities. The main event here is a new agreement to help them secure funds. Think of it like a company getting a new credit line, but for a much larger scale, and specifically for financing loans tied to commercial real estate. They've entered into what is called an uncommitted master repurchase agreement. Now that sounds a bit scary, but essentially it is a deal that allows them to borrow money by selling and then agreeing to buy back certain assets. In this case, it is about financing first mortgage loans and other commercial mortgage loan instruments. The key here is that it is an uncommitted agreement, meaning the other party isn't obligated to lend them money, they just have the option to. The other party in this deal is JP Chase Bank National Association, a pretty big name in the financial world. They are providing the buyer side of this repurchase agreement. This agreement is for a substantial amount of up to $450 million. This is a significant chunk of capital that Lument Finance Trust Incorporated can potentially tap into to fuel its lending activities in the commercial real estate sector. The initial term of this agreement is set to run until November of 2028. And importantly, Lument Finance Trust Incorporated has the option to extend this agreement for 2 additional 1-year periods. This shows they are planning for the longer term and want flexibility. Now, Lument Finance Trust Incorporated itself is also stepping in as a guarantor. This means they are promising to back up their subsidiaries' obligations under this repurchase agreement. There is a cap on their liability as a guarantor, which is good to see. It will not exceed 25% of the outstanding loan amounts under the repurchase agreement. This is a crucial detail as it limits their exposure in case things go south. The agreement also comes with certain financial conditions that Lument Finance Trust Incorporated must meet. This includes maintaining a minimum tangible net worth a minimum amount of readily available cash and keeping their borrowing levels in check. These are standard protective clauses for lenders ensuring the company remains financially healthy. This filing essentially confirms that this new financing arrangement is now a direct financial commitment for Lument Finance Trust Incorporated. It is not just a side deal, it is a material part of their financial operations. The filing includes the actual agreements as exhibits, which are the detailed contracts outlining all the terms and conditions. We've got the uncommitted master repurchase agreement itself and the guarantee agreement, and it is signed off by James A. Briggs, the Chief Financial Officer. This confirms the seriousness and official standing of this agreement. So what does this all mean for Lument Finance Trust Incorporated? This is a significant step in securing funding for their commercial real estate lending operations. A $450 million facility is a serious amount of money and shows confidence from a major bank like JP Chase Bank National Association. The extension options signal their strategic outlook. The guarantee with its limitations provides a degree of security for the bank, while also defining Lument Finance Trust Incorporated's commitment. However, it is also important to remember this is an uncommitted facility. The bank isn't obligated to lend the full amount at any given time, and Lument Finance Trust Incorporated has to meet specific financial covenants to maintain access to these funds. If the commercial real estate market experiences a downturn, or if Lument Finance Trust Incorporated falters on its financial health, these funds could become unavailable, or their guarantee obligations could become more pressing. The risk lies in the underlying quality of the first mortgage loans and other instruments they plan to finance with this capital. In conclusion, this filing paints a picture of a company actively working to expand its financing capabilities in a challenging but potentially rewarding market. It is a strategic move that could boost their growth but also carries inherent risks tied to the financial markets and the real estate sector. Alright, that is our breakdown of this Lument Finance Trust Incorporated filing. What is your take on this new financing agreement and what it signals for the company's future? Do you think $450 million is enough to make a significant impact? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more on finance and investing. Thanks for watching, and we'll see you in the next video.